Welcome to the Trading Desk, where money talks. My name is Dave Floyd with Aspen Trading Group here in Bend, Oregon. And today, as usual, I'm joined with Matt Davio of Red Rock Partners and Jesse Felder of Felder & Company. Before we get into today's show, let's take a look at what the markets did in the month of May.
This month in the markets, the S&P 500 continued its move up. Most of the month was spent in a middle range, but the ending brought us to the high prints of the month. So the S&P continues its V move. You can see very clearly that the move is very V-ish, which to me still means pullback has to come at some point, but it could be higher yet. The 10-year rate is the next chart. 10-year rate is printing as high as almost 3.8% on the 10-year, which has almost doubled from the low of 2% back in late December. So this thing is on the move. The trend is very clearly up for interest rates. Watch that as inflation grows. Next chart kind of confirms that the commodities index chart here has bounced off the bottom a good 25%. The commodities have stretched to a nice move here from 200 to 260. Looks like there's more upside to come there, maybe to the 300 level. Again, maybe due for a little bit of a pullback as interest rates also need to pull back a little bit. And then finally, there's a correlated chart here between the S&Ps and the banking index. You see they're moving together, and the banks are kind of failing a little bit here. They're going to need to confirm this move to the upside if the S&P 500 and the overall stock market is going to continue to go up.
As you can see, for the month of May, for the most part, we did a lot of sideways, choppy action in the S&P 500 as well as the major indices. A lot of other markets, though, were moving higher, at least in terms of treasury bond yields, gold prices.
Massive reflation trade is on.
Yeah. But we were just talking during the break here. S&Ps broke out on Friday, and they continued that move today around 940.
Yep.
And the one thing I noticed, I was a little skeptical to begin with, and then when I looked at it compared to the financial stocks, again, I'm not saying I'm calling a top here, but I'm just a little skeptical that the rally's getting a little long in the tooth.
Well, I think you have to watch the financials. They led us into this crisis, and they led the bottom in early March, and they were leading for the past couple of months. And now we see the market breaking out to a new high. It's still not a new high for the year. I think we're right at
945 was the year high in January on the SPOs, and we're right under it.
Yeah. Financials are still below that high that they set about a month ago.
Significantly, 15% or so. I think we got up to 43, 44, and we're at 36, 37.
So that's a key thing to watch. See
and
if the financials
the trannies aren't breaking out either. So,
and I also think if you look at it from a sentiment standpoint, everybody, not everybody, but bullish sentiment's getting pretty high. Everybody's kind of back on the party train.
Yeah.
It's high relative to what it's been in the last year, which is negative. I mean, record levels of bearishness. But I think they've been, the problem is the last 2 months, everybody's been looking for the pullback. All the people that missed, and they never got that pullback. Just like I said, after, I think it was the April show, I said, if you're looking for that pullback, it may or may not happen. A lot of times when you have everybody looking for it, you don't get it.
Right.
And so, but I think now this breakout might indeed just be kind of a head fake. And if the financials don't start getting going again, we could see that pullback that people have been waiting for. So
we're going to continue this conversation when we come back. We're also going to talk about higher interest rates, if that, what impact that will have on the equity markets as well. We'll be back in a moment. You're watching the Trading Desk on COTV, Channel 11.